So we'll start with the next plenary, which is Plenary 2, Global Trends, Opportunities, and Challenges in Responsible Investments. It gives me immense pleasure today to introduce all these esteemed speakers on the dais. To start with, Ms. Soumya Rajan, founder and CEO of Waterfield Advisors. Soumya is the founder and CEO of Waterfield Advisors, which is the largest multi-family office and wealth advisory firm in India. With over 25 years of experience in private banking and wealth advisory, Soumya commenced her career at ANZ Grindlays Bank, which later became Standard Chartered Bank. She worked for 17 years with the bank in both India and Singapore, with her last role being the head of the private banking division of Standard Chartered in India. In 2011, she established Waterfield Advisors. As one of the earliest advocates of fee-only investment advisory in India, Soumya founded Waterfield on the principles of an alignment of interest with clients in the wealth advisory space. Today, Waterfield advises on financial assets exceeding $4 billion on behalf of India's leading and some of the most iconic business families. She also provides guidance to these families on non-investment issues such as succession planning, corporate and family governance, business strategy, and philanthropy. Soumya's leadership has contributed to Waterfield's reputation as one of India's largest and most awarded wealth management firms. In recognition of her contributions to the wealth management industry and as an entrepreneur, Soumya has received several awards and honors. Soumya is a member of the advisory committee of PASL, the regulatory and supervisory body for registered investment advisors in India, and serves as a board member of several non-profit organizations in the education and healthcare sectors. She was awarded the Radhakrishnan Scholarship to study at Oxford University, UK, where she earned her master's in mathematics, in addition to holding a BA honors in mathematics from St. Stephen's College, Delhi. We welcome you, ma'am, and it's an honor to introduce you. Next up, Mr. Loai Bataine, who is the Senior Executive Officer of Om Invest Capital DIFC. Mr. Loai Bataine is a seasoned and successful investment banker with over 3 decades track record in commercial banking, investment banking, asset and wealth management. He is an expert in guiding the implementation of business plans and strategies. He currently serves as Senior Executive Officer of Om Invest Capital DIFC and is responsible for managing Om Invest DIFC investments. Earlier, he was the founder CEO of Ubhar Capital U Capital. Loai has extensive experience in matters relating to mergers and acquisitions, restructuring, divestments, performance improvement, IPOs, and fundraising transactions. His key strengths lies in his extensive experience as an independent board advisor. Thank you, sir, for making it. Welcome. Mr. Suresh Vaidyanathan, who is the CEO Special Projects Ghasan Abood Group. Suresh Vaidyanathan is one of the region's accomplished C-suite leaders with an experience of 25 plus years with multi-business organizations. He has extensive experience across diverse business sectors and multiple geographies in Middle East, Africa, Europe, Asia, and Australia. Suresh has an excellent professional standing in the region, having been included amongst the Forbes list of top 10 Indian CFOs in the Middle East in 2019. And the top 20 CFOs in the GCC 2021 Khaleej Times NAFA list. Recently, in 2023, he was included in the Arabian Business Dubai 100 Power list, the top 50 most powerful Indians in the Middle East, and the Economic Times most promising business leaders of Asia 2022-23. He is an alumnus of the leading digital business transformation program at IMD Business School and is certified in blockchain technologies and artificial intelligence at MIT Sloan School of Management. He completed the M&A program at University of Chicago Booth School of Business, and in addition to programs in governance and investing at Harvard, INSEAD, and Wharton. Thank you, sir. We welcome you. Finally, CS Prashant Tandon, CEO and MD, Lighthouse Canton, UAE. Prashant joined Lighthouse Canton in 2016 in Singapore and moved to Dubai in 2017 to set up the DIFC business. He is the CEO for Lighthouse Canton Capital DIFC Pte Limited and heads the multi-family office business for the firm. He is responsible for engagement with key clients in addition to building a footprint for the business in the MENA region. Prashant brings over 20 years of experience across large international banks like Citibank, Merrill Lynch, and Barclays. In Barclays, he was responsible for managing the non-resident Indian team in Dubai, along with the portfolios of select ultra-high net worth and institutional clients based in MENA and South or Southeast Asia. Prashant has specialized skills in complex derivative products across interest rates, equities, and forex, and has a keen understanding of the requirements of corporate and institutional clients. Prashant qualified as a chartered accountant and is a merit holder from the Institute of Chartered Accountants of India. He is also a member of the Institute of Company Secretaries of India. He received his Bachelor of Commerce degree from Delhi University in India. Thank you, and it's an honor, as usual, to introduce all these esteemed speakers. Now I hand over the session to all these esteemed speakers. Thank you. We need a mic. Is your name?
All right. Good afternoon, everyone. It's so good to see all of you here for this conference. And welcome to all those who are dining in remotely. For promises to be a very enlightening session, hopefully, on global trends, opportunities, and challenges in responsible investing. I'm also deeply honored to have a very esteemed and knowledgeable panel of experts on the stage with me who will share their deep insights and knowledge on the subject at hand. But before we dive into the serious stuff, I just wanted to share something I was reflecting on while I was driving to the conference. You know, in the good old days, investing meant setting some money aside to work with the hope of receiving a little more than you invested over a period of time, something that will give you a smile on your face when you review your portfolios. But it looks like today, we are expected to make a profit while saving the world. It's a bit like eating salad with kale or spinach in it, which you know is good for your health, but secretly hope it tastes like dark chocolate. It's tough, difficult to implement, but yeah, if done properly, can be extremely rewarding. So jokes aside, responsible investing is not just a trend, it's slowly becoming a norm, and for all good reasons. We are at a point in history where our financial decisions can and should have an impact, a positive impact on the world at large. It's not easy, it's not without its own complexities, and this makes today's discussion extremely relevant. Over the next 45 minutes or so, we'll try and cover a very wide landscape. We might cover themes like identifying the latest trends on responsible investing, green bonds, climate finance, circular economy. We'll try and understand what are the opportunities in this landscape. We will address geopolitical and country nuances. We'll try and see how the developed world and the emerging economies are adapting themselves to live to their commitments to responsible investing. Of course, it will not be a meaningful discussion unless we dive deep, identify, and try and find ways to address challenges that economies and businesses and investors face while living up to the dream of investing sustainably and responsibly. Challenges like greenwashing, where we are made to believe things are a lot more green on the outside than they actually are. The ever-prevalent problem of data reliability, policy uncertainty, and the likes. And to end the discussion on a positive note, we'll of course explore opportunities that are on the horizon, which we can all look forward to, from technological advancements, blockchain, the opportunity in the whole circular economy piece, and of course the regulatory incentives that might be available to businesses and economies alike. That said, as I said, I'm extremely proud to have this panel of co-speakers with me. I would let them give a brief introduction about themselves before we dive deep into the topic. So, ma'am, maybe begin with you, please.
Sure. Thank you. Thank you first for the Institute of Company Secretaries of India for having me on this panel. I'm just going to start with a couple of opening remarks as part of the discussion and really focus some of my remarks specifically with regard to India. So India, if you were to just look at it, is at a fairly complex inflection point. We are the most populous country in the world. We are also one of the largest emitters, third in the world after the US and China. Our carbon emissions per capita is about 2.7 tons, which is about 1/3 of what China emits and 1/6 of the US as well as of the US and Canada. But what's interesting here is that while we may not have necessarily created the problem, India needs to be very much a part of the solution if we're not going to hurtle towards climate disaster. India, in that context, is actually very vulnerable to climate change. And in some ways, the Indian government's stated objectives, which is net zero by 2070, along with what we have committed at the Paris Climate Agreement, which is really to make sure that 50% of our energy consumption by 2030 is going to be from renewables, 500 gigawatts is what we will have, which is non-fossil fuel capacity, as well as efficiency levels of 45% over our 2005 levels. All are really quite aggressive at one level. So when you look at the fact that these are aggressive targets, we also find that we're also fairly underinvested when it comes to climate change. So again, statistics, which is something to ponder on, is that we receive less than 2% of the global climate tech funding right now, 80% of which goes towards seed investments. And climate equity funding is just about 3 billion in the last 7 years. So when you look at these statistics and you look at the fact that we have to be part of the solution, you realize that we have to do much more, and India needs much more capital. So just in terms of renewable energy, we probably need close to about 150 billion. Green environment or built environment is about 40% of carbon emissions, and we need about 35 billion by 2025. So these are all statistics that kind of make you wonder, where is that money going to come from? And that's where we need global investors to really invest into India, because the intent is that for every dollar that you put in India is going to have much more positive impact in that sense. So I'll close with that, and then maybe the discussions going forward.
Hold that thought on India being a part of the solution. We'll cover that soon. Suresh.
Good morning or good afternoon, everyone. Nice to be here. So I've been in the region for the last close to 28 years. And I've seen how the UAE and the region has kind of progressed over the years with what we call the conventional model of business. And with the kind of change in outlook now that Prashant, you alluded to, and the increased focus on sustainability, which we saw UAE take a lead through the event, the COP28 event, which happened recently, which actually put the country at the forefront when it comes to sustainability, and actually has created a terrific momentum for the private sector as well as the government with all their initiatives in this particular area. And predominantly, I worked for large family groups, which typically run diversified portfolio of businesses across various sectors, across many countries in the Middle East and Africa. And there is a certain way, which probably we can elaborate later, in terms of how, say, family groups look at sustainability, and probably they think more on the commercial outcome as much, not too much in favor of the concept itself, but I think there is increased focus on like what do we benefit out of it, but we can talk about it. But I think when it comes to awareness, I believe in this part of the world, it has now probably reached the most ideal stage. ripe for action. And I want to particularly point out to the food sector, where still I think globally the kind of waste statistics are quite stunning. According to published statistics, we are talking about almost close to $1 trillion of food being wasted or lost annually. It's about almost 1.3 billion tons of food, which can actually feed 2 billion people. And as per WHO, there's almost like 800 plus million people who go without food or with very little food. So there is a significant scope there for money to flow in to make the supply chain more optimized, as well as to for technology to be deployed to make sure that there is a match between the supply and demand, and the actual supply reaching where people need food at the right time at the right cost. And maybe later today I can talk about some of the initiatives we as a group have taken. So we are again a multi-business conglomerate, and we are in the business of the food value chain, distribution, retail, processing. We have a digital platform as well. We are in automotive, healthcare, and importantly, we are in hospitality, and we have a hospitality brand that is totally themed on sustainability. It's Australia-based, and it's very successful. As of now, we are working on two very large projects with the government of Abu Dhabi. One is the Abu Dhabi Food Hub, where again there is a large scope to optimize when it comes to sustainability and the cold chain and things like that. And then also the Global Automotive Hub, which is again another PPP with the government. So I look forward to the discussions going forward.
Thank you, Suresh. So from somebody who advises people on their money to somebody who's running a conglomerate, let's hear from someone who's managing significant amounts of proprietary capital and is a deployer. So Loy, your inputs, please.
Thank you. Good afternoon, everybody. My name is Loy Bataine. I'm Jordanian, actually, but unfortunately left my home country 30 years back. I was in the region more last 27 years. I work in Far East as well, and London partially. I started with my career with one of the well-known bank called Arab Bank. The reason I'm mentioning the bank for one story, because when I joined, I started with the credit department. And the first lesson in the credit department, before you recommend or give any loan, you should have something called ethical loan. You should make sure that whatever the money is being given, it has to be used ethically. And to define ethically, and this I'm telling you, I'm sharing 38 years back. To be ethical, you should make sure that the money is not being used for certain areas, and it has to be productive. And this should be generate and add value to the economy. And believe me, this is 38 years back. And to translate this for the time being, this is what we used to call CSR and ESG later on. Then I discovered now what we were doing 30 or 40 years back. So basically, when I started my career, it was in a small country, and the loans usually either for trading or for agro projects or manufacture. That time there was no digital assets, no structured funds, etc. And every time we used to give a loan, we have to visit the location and to make sure that the loan is basically given to the right person with the right team, for the right place and for the right basically purpose. And every time we used to have also to make sure that this loans is creating, could be jobs, added value to the economy, and also is clean and friendly with the local environment or culture. How to make it local and friendly, to make sure that any project will not backfire on the economy / the society, because we are a bank there forever. It means that we don't want to be known that quoted that the bank give a loan to an industry or a people or a community where it's impacting the society. I'm sharing something where maybe could be elaborated more and more. For me, responsible investment is more important, but I would like also to light something that we also would like to have responsible investor, not investment as well. And this is something where, unfortunately, most of the people missing that. Because we know that everywhere, and now this is the story, investments driven by investors. If investors doesn't want to invest, nobody can push them. Because that everybody is now focusing on sovereign wealth fund in the region, and we are in UAE, and we proudly to say that UAE was leading ESG, and in particular Abu Dhabi as a city in the last 25 years. I was part and directly or indirectly in certain initiatives, but part of my career, I was big of my life, I was living in Oman, and when in Oman, we used to be known very environmental friendly country. And again, that time there was no SG again. And every time, for example, we developed 2 cement factory projects. I'm sure a lot of colleagues and friends were there in Oman. Laxman was there. And it was not allowed to use coal. And honestly, we were not fully understand why it's not been used, because the answer was because this is not environmentally friendly, basically tool or fueling tool to, because that we brought up and we developed gas projects, etc. But not on that actually aspect. There's a lot of projects and industries been developed in a way that it needs to be friendly with the environment. We have to be, and because that, for example, fishing, there is a lot of things in fishing industry, or what we call it blue ocean or blue sector, which not been used in a friendly way. Fishing type, fishing timing, the way you fish, the way you collect, the way you manufacture, because that now countries wake up and they found that most of the fishing rights has been sold to other countries, which now there is a lot of anti-fishing industry across the globe. We know that green basically move. But again, how to brought all these subjects to our context, to ESG. This is where I would love to maybe elaborate more and more. Sorry, I took more than time.
That's very enlightening. Thank you. Yes, that's very enlightening. Thank you. I heard you say something to the tune of a responsible investor. So on that, I'll ask Suresh a very pointed and hopefully a very practical question. Suresh, why do it as a body corporate? What's so good about responsible investing? Because we always heard about this carrot versus stick approach, right? Is it the regulatory incentive? Is it the public perception? Or is it, the opposite, trying to avoid negative publicity, trying to, avoid regulatory fines? As a business, why is ESG or responsible investing so important to you?
I think it's a combination of these factors. Obviously, there is a regulatory bit, which kind of mandates businesses to follow certain regulations. And as these regulations become more and more well articulated and clearly with very measurable performance metrics and to have an administrative capability to be able to manage that. And I'll give you an example in this market. So when it comes to, say, at the retail, use of plastic at the retail level, right? So this was brought in, I think, a couple of years back. There's no plastic at checkout with the supermarkets. But until then, most of even the large players who have a multinational presence were actually liberally using plastic at checkout. But after the regulation came, there is a clear, I think India did it many years back. So right now, you'll not find a food outlet or a supermarket using plastic. So obviously, regulations play a key role because there you don't have a choice, irrespective of cost. I think the second factor is how the business will benefit commercially, right? So, and that Actually, people don't realize that most of the initiatives, if you properly analyze, will lead to a commercial outcome, if not immediately, but like over a period of time. I think it is only this gap that exists in terms of the knowledge at the level of the board or at the level of the ownership that is kind of creating a delay in terms when it comes to undertaking voluntary initiatives when it comes to sustainability. Again, here I can give you an example of, say, for example, if it's a supermarket, say if you want to reduce your food wastage, so then obviously you deploy technology to make sure that your reordering is at the right level. You make sure our outlets are the temperature at the retail areas are regulated, so you monitor them and you make sure that it is consumed less. The refrigeration systems that you invest in, so you don't have to over-design that. So you go by exactly by what is required. So you can save a lot of money on capex as well as when it comes to utility costs. So when you have a diversity, gender diversity in the team, so it makes it more efficient and competitive. Even things like, for example, if you ensure that your staff live, like say, within X kilometers from the office, so your outlet could be 10, 15 kilometers. So that leads to a lot of efficiency when it comes to transport costs. But at the same time, it reduces vehicle emissions because you don't need to transport people from a long distance. And things like educating consumers and for them to be more responsible and to be able to kind of understand why an outlet does all this. And more importantly, responsible sourcing. So today, see, unlike India or other markets, UAE is a big importer of food products. So you get food coming here from all parts of the world. It's a free trade system with a very low import tariff. So naturally, there's by the time food reaches here, it's already done a lot of thousands of miles. But the government is pushing for local production. But the consumers have to understand that buying local stuff is more healthy and it encourages local production and it's more fresh. So this kind of awareness has to come. So as a business, you try to promote this because you make more money sourcing locally. At the same time, there is also the sustainability angle in this, which also is good for the society, right? So there are many factors at play here, and if a business has to first realize, I believe at the top level and even at the level of stating the vision or articulating the vision of the company itself. So if there is a clarity in terms of, yes, we want to be a company that is looking at the long term and looking at sustainability, then you kind of flows down with strategy and with the board and with clear KPIs and systems to monitor performance. So I believe there is a valid reason for businesses to take this seriously. And I don't think there are any more skeptics on climate change. I think everyone now understands that this is a reality.
Oh, that's very insightful, Suresh. Thanks for providing these very practical insights. So as an investor, it's established that yes, responsible investing is the norm, the trend. What are the sectors or industries you feel give an investor an opportunity to make sustainable investments? Anything specific that comes to mind as asset classes or investments that an investor could look through while making these choices?
No, clearly, I think there are multiple sectors that are actually going to come about because of the push towards a sustainable future. A couple of them, certainly from the India context that we would look at, is around electric vehicles, the transportation sector in particular. The EV industry in India, for instance, is growing at a CAGR of about 44%. And we do see that by 2027, we'll have close to about 6.4 million units, which will actually be sold. What this means is then you just need to have the supply chain also for that. So whether it's in terms of charging stations or battery manufacturing units, it's going to mean newer sectors that we will have to invest in. So that's one big area of opportunity. The second is clearly around renewable energy. I spoke in my opening remarks about close to about 150 billion that's going to be required in that area. How do you finance it is going to be key. And that's really a large part of just the transition finance that we will need. So renewable energy is a big area. Electric vehicles will be a big area. I think Suresh spoke a little bit about also the food industry, so sustainable agriculture, plant-based industry. These are all sectors that never existed before, but which are now coming into the fore because we need to make sure we head towards the net zero targets that multiple countries have actually established. I think another area is also, of course, around water and waste management. India is actually going to have a demand and supply gap in terms of water to the extent of about 50% by about 2030, which means that we need to be much more conscious about all various sectors around wastewater management, desalination plants. So these are areas which weren't really there. So we would look very closely, largely at sectors around EV, renewable energy, sustainable agriculture, as well as water and waste management.
Thanks. Do you have any inputs to share in terms of specific areas you're looking for as an investor to try and make an impact on responsible investing?
Yeah, thank you. Actually, yes, it is. It depends on where you are located, actually. I think last month I was, 2 months back, I was speaking at a conference for the same subject, and the question was where to put or to invest. I believe fundraising is easy. Everybody is coming to this part of the world for fundraising, but you have to ask where this will be deployed. I believe, before I answer you, if you allow me, you should know where is this fund will be allocated and which industries and which countries. I believe, for example, certain countries in Africa, India, Asia, Middle East, they need money more than Europe. Because for ESG and the climate change, and this is much need. Why I should give you money to be raised from the region and to be invested in Europe? Actually, I believe Europe market is more advanced and accommodated funds the last 2 decades in this area, and other countries need that. To answer your question, I believe agro projects, this is one of the mega, basically. And again, we should not underestimate the blue sector, blue ocean, in fishing industry, it's a big area. And honestly, if you go by numbers and reports, we are losing a lot of assets in that part, because of severe fishing, which without any ethics has been there. And I think we need more, basically, responsible investment in this area. One area where, if you allow me to share, there is one project where our sector where I don't see proper investment in buildings and responsible investment. I'm not architecture, I'm not engineer. Okay, my father was engineer, my brothers, my friends. Always I keep asking them, we need to have proper structure for responsible investment in buildings. I'm not talking about only green buildings. I'm not talking about buildings where they have tick certain books, but we need to have responsible, could be accommodated, affordable houses. This is one of the areas where I believe, but it has to, for me, this is a responsible investment. 3 sector where I believe, but I believe the biggest sector which I believe I would love to see investment there, to affordable houses where tick certain boxes. Thank you.
We're going to continue with you. Soumya picked up the thread of being a part of the solution. So I'd like to understand from you, if you can share some insights. You can use my mic. Any specific trends or initiatives in the UAE in general, and of course Dubai, Abu Dhabi in particular, that you see initiatives being taken in the field of responsible investing, ESG governance, etc. Masdar City, for example, comes to mind as a shining example. So if you can shed some light on specific initiatives that are being taken in the region.
Thank you. Thank you. It's an important question. Actually, this morning we heard Mr. Hamid Mazroui when he talked about ETF and the green bonds and etc. And when I also introduced myself, I mentioned that UAE in general and Abu Dhabi in particular, they were and they are actually leading the region for responsible investment and ESG. You mentioned Masdar. I was in Abu Dhabi working in 2006. And of course, Masdar, if I'm not mistaken, started in 2003 or 2004. And when it started the concept, honestly, I was one of the few people, or maybe I was not laughing, but I would say, this is crazy. Who will live there? Why we should put all these billions of dollars in that particular area? And nobody was actually reading or listening or estimating or discounting the future, what we need and why we are doing that. Okay, it was iconic project that time, but now it's been copied and everywhere actually. Masdar is one of the area key projects where His Highness Sheikh Mohammed and the Abu Dhabi government that time, they took the initiative, they took the risk and developed that in a way to present a symbol or prototype case for the rest of the world. And this is where now across the globe, everybody is trying to do what Masdar did. I came from a country called Jordan. Now, as of today, 22% of the power generation in Jordan from sustainable energy, either solar energy or wind or other sustainable assets. UAE is one of the, I think, the top oil production or producers. They are producing more, I think, more than 4 million barrels a day. But even though, they are investing in sustainability and sustainable assets, sustainable energy. And look to Masdar now, they are asking Abu Dhabi to use their expertise in other countries. Dubai, same thing now. If you go and cross Dua headquarters now is one of the most amazing headquarters. It's tick all the books in terms of sustainability buildings. But no doubt, UAE and Abu Dhabi, now they have the expertise which needs to be capitalized and to be taken. For me as an investor, for me as a fund manager, and when I build my strategy or plan to do something. Abu Dhabi IDX, they did a lot of initiatives, and I believe this should be taken into consideration. For me as a fund manager, if I will do something, definitely I will use Abu Dhabi as a milestone, and I will come and explore what I can do with ADX and with other stock markets in order to attract more investors. Again, responsible investors. Because if we have responsible investors with the responsible investment, I think we'll reach what we are looking for in due course.
Thank you, Luai. A very significant part of responsible investing and the whole ESG construct is the concept of governance. And with that come the challenges of working in emerging market economies, lack of transparency, etc. So Suresh, it always stems from the top, right? What do you think are the trends you see in the region specifically and globally, of course, towards board independence, diversity in leadership positions? And then, of course, I'll lead this to Soumya to give some insights on India. But starting with you first, where do you see governance?
Well, you see, I think, like I said earlier, I mean, this needs to happen from the top, right? So right from the articulation of vision, or even going back to the drawing board, because many organizations, they have vision written like 30, 40 years back, to kind of revisit in the context of what's happening today on sustainability, to make that clear. And then you have the board. And I think the key is to have at least one member in the board to be responsible to ensure that the sustainability goals are well managed at the board level. So that kind of specialist, I think, is very much required, preferably at the board level. But of course, at the C level, you have a CSO or someone else who could handle that responsibility as well. So unless it actually gets incorporated and monitored on a regular basis with the goal set, and unless the board and the management is kind of incentivized with clear link to the KPIs, it's going to be a challenge to kind of see tangible progress in this area. So when it comes to the region, like as I said earlier, that massive momentum has been created over the last few years by the government with their own initiative, because UAE is obviously a big fossil fuel producer, and therefore has a very challenging ambition on the net zero. And this can't be done without the private sector also playing a key role in this. So obviously, there are the listed companies which have to follow the regulations in this area, and they're trying their best. I mean, there is still, I believe, a gap when it comes to reporting or measurement of metrics. There is a significant scope for improvement there. Because I think still many of these reports are very anecdotal and, like based on certain initiatives, and maybe they're not fully aligned as sort of like an overall approach to sustainability. So when it comes to the private sector, privately owned sector, yes, the awareness is much more. But I think still there seems to be more of a focus on commercial outcome, which is understandable, because you see, they are like private shareholders, and the younger generation is coming onto the boards, and they have different thoughts on ideas. And there is also an increased pressure from consumers, because I think unless the customers want certain products, or they're aware of what they are buying, unless the pull comes from that side, the companies are not going to be incentivized to move. So on the private sector, I would say that probably the speed has to pick up. Comes to the awareness of the board, and also the willingness to bring in independent board members, because some of the family groups still feel that they have a certain they want to keep their business confidential in certain areas, and there is a reluctance to bring outside people onto the board and give them visibility on what they're doing. But this is changing. I think it's encouraging. And I mean, not just the UAE, but even in Saudi and other GCC, there is a big push that's happening, and it is changing. So I mean, in summary, I can say that we're much better off in this as compared to, say, 5 years back. And the momentum is there, and hopefully we'll see more progress in the next 3 to 5 years.
Thank you, Suresh. Soumya, your insights specifically on India, if possible.
Yeah, sure. I think I'll just take the question on governance and just a notch above the corporate, which is really around the judiciary, the government, as well as the regulator. So when you look at the judiciary, I think a couple of interesting things have happened in 2 orders, which were quite interesting. One was in 2018, when the Supreme Court actually said that the fuel emissions for the auto industry, we should move from BS4 to BS6. Leapfrogging BS5. What was interesting there in that order is that the Supreme Court actually affirmed, and I'm just going to read this, as an established principle of law, that the right to life also includes the right to a decent environment. So this was way back in 2018. What was also interesting was earlier this year, the Supreme Court again, in an order relating to the living species of the great Indian bustard, which is a rare species, the Supreme Court added within that the right to protection against climate change. So you're seeing right from the judiciary itself a requirement which is kind of setting the tone for governance right down the chain. When you look at the government, there have been many, many different initiatives that they've taken. Originally, we had the CSR, corporate social responsibility giving, where it was 2% of net profits based on size and scale. which came in way back in 2013, really to encourage more corporates to give to the social sector. More recently, you had the production-linked incentives, or PLI. If you look a little bit more in detail into what those incentives spoke about, 70% of it actually relates to renewables, because at one level, India also wants to reduce its dependence on oil. If you look at a new initiative which came out from the government on solar panels, it's actually providing subsidies to about 10 million households, encouraging them to actually use rooftop solar. A little bit about waste, which Suresh already spoke about, was the ban on single-use plastic. Interestingly, in this year's budget, the finance minister actually said that green growth was one of the top 7 priorities of the government. So when you look at some of these in terms of the tone which is being set by the judiciary, the tone that's being set by the government, it is trying to encourage greater governance at the corporate level. The regulators themselves, we have SEBI brought out what is called the Business Review and Sustainability Reporting, which is BRSR, which is mandatory for the top 1,000 companies of India, listed companies. And you also have a core BRSR, which is in a phased manner over the next 4 years, where you will actually have to also declare the same metrics, not just for you as a company, but also for your vendors and your supply chains. Now, these are all things which are encouraging corporates in order to have a higher level of governance and disclosure. And of course, the last point I'll just make is with a recent framework that RBI brought out in February this year in terms of how are we looking at similar to TCFD in terms of the task force for climate related disclosures. How are we integrating that? How are banks integrating that in terms of their loan processes? So this again are all the various initiatives that the judiciary, the government, the regulator is really taking in order to ensure that there's a higher level of governance that corporates in turn start beginning to use.
Thank you so much for sharing these insights. There's something closer to my heart and, of course, to Lighthouse Canton I'd like to share. So as signatories to the UN Principles of Responsible Investing, we are, of course, advisors to our clients on asset allocation as well. We're often torn between the difficulty of doing well while doing good. And that sometimes becomes a challenge while advising clients on their investment portfolios, our own prop capital allocation. How are you as advisors navigating this landscape? When you talk to clients, how are you balancing this delicate act? And then I'll, of course, come to Suresh because he spoke a few times about commercial outcomes. So it'll be very important to understand his perspective as well.
So I think one of the things that we look at, so as a family office and a multifamily office, we are in the business of wealth creation and preservation. So when you look at the preservation word, you're really looking at trying to ensure that the wealth passes on over generations. Given that everything that we speak about in terms of responsible investment is towards creating a sustainable future, you are in some ways very aligned to the client because the client's goal is to ensure that the wealth does get passed on and is preserved for subsequent generations. So I actually see what we do in terms of responsible investing to actually fit in extremely well to what is the client's ultimate goal. So I don't necessarily see it, Prashant, as, is there a balancing act? I think when you're looking at sustainability in its broader context, and what we have to do for wealth preservation and wealth creation, we do need to take a much more longer term lens. So everything that you do in terms of integrating ESG in your decision making, integrating climate risk in your investment decision making is really all part about what is the goal that you ultimately have for your clients, which is exactly towards creating a sustainable future.
Suresh, your thoughts on having the commercial outcomes at the forefront of every commercial venture, which is a business that you run, a conglomerate. How do you navigate this day-to-day balancing act of doing well while doing good?
See, sometimes it kind of happens naturally. I mean, I'll give you the example of, a hospitality brand we created in Australia. So our initial locations were all like close to the natural scenes, like, large assets, say close to the Great Barrier Reef, which is one of the like preserved areas. So there's a lot of nature, and when you want to build resorts in those kind of places, so naturally you think of sustainability. And we kind of built the entire organization and brand. And in fact, even the theme it's called actually responsible luxury. So you want the best premium luxury, but at the same time you're responsible to the natural environment around you. So we right from day one we came up with the policies that will govern this business, and all of them are based, revolved around ESG. And we had an external body in place to monitor this and for all the metrics to be set. Could be even simple things like, sourcing from within X kilometers from each hotel, making even, the access cards to the rooms using recycled wood rather than plastic. I'm just giving like simple examples, gender diversity, making sure the local communities are involved in activities and getting into educating them. So when you actually try to build the entire business around a theme, so what happens is it works both from a commercial point of view, because obviously then you are actually known as a brand in the country as well as globally. And that actually results in more people coming and staying and also feeling good that they are part of such an initiative, right? But when you have a running business, it's kind of more challenging because you got to kind of reconsider what you've been doing. And a lot of people will be surprised to see that what the initiatives that you want to kind of do will result in a better commercial outcome. So it is just that process of realization at the C level, which I believe right now, I don't think we'll find any CEO here who actually is not, it's not aware at all about the need for sustainability. But it's more of putting that extra effort, and they will find that several areas, many of them low-hanging fruits, which is good for the world, but at the same time is also good for the pocket.
Well, that's very nice way to conclude this. But of course, no discussion today is complete without discussing the impact of technology. So that's an open question to all the three panelists, and I'll be happy to pitch in if required. But how do you see technology, maybe it's blockchain or the integration of artificial intelligence or general technological tools available today? How do you see these impacting your day-to-day decisions, and how do you weave them into your responsibilities of investing sustainably? Luai, starting with you.
Actually, I might be the wrong person. I'm coming from old school, actually, even though I was heading IT steering committee for almost 17 years in the previous bank where I used to head. I believe technology is a crucial integral part of sustainability for two reasons. Number one, this is where we can help us in decision process and decision making. We can come up with all the numbers, ratios, and basically future projection and using technology. Either I'm not a big fan of digital assets, but everything can be tokenized now. Either anything in sustainability or ESG can be tokenized and can be structured and be using the technology. And number two, using AI could be an early stage, but AI also, bear in mind, AI is reading what's written already there in the system, can help and to fasten the decision process and to attract and help more people. I will give you two things for technology. Right now, for example, where I'm working, we have ESG team. We have what we call it sustainability reporting officer. He's bringing all the numbers to the investment team and to MIC. In order to do that, he's doing a lot of homework, what others did and where we can be and where to be. But using technology, it's a must. I never been through a system or procedures where can using AI at this point of time. But in order to enhance and to attract a new generation, basically, I don't know what they call it, the new generation, but definitely using technology, this will help us in bringing those people to our side. Thank you.
That's another way to look at inclusion, right? Thanks for that. Soumya, your thoughts?
So coming back to the fact that I think we have very little investment that comes to India in terms of climate tech. In my opening remarks, I shared that it was less than 2%. So that necessarily has to change. But what's interesting for me is that some of the new sustainable technologies going forward is really what we will need around innovation. So whether it's looking at EVs, whether you're looking at how are you going to power those batteries, or how are you going to actually look at sustainable storage? These are all going to require technologies that we need to invest in. I think one of the issues in India has always been that we are always a little underinvested in terms of R&D. Even if you look at corporate India, I think our R&D is less than 3%, is what we actually invest into these spaces. So innovation in some ways may have to come in other parts of the world, which then can be used in India. And of course, for India itself, we don't have enough funding to really look at this space, is my view.
No, I think there's an additional point I'd like to make here. We all spoke about the problems we face with the consistency and reliability of data around the whole concept of responsible investing, the MISs, and of course, evaluating investment opportunities as well. With Lighthouse Content, at least I can vouch for the fact that the integration of technology and artificial intelligence has really shortened our turnaround times of both evaluating investment opportunities from an ESG lens, as well as predicting and reporting outcomes thereof.
Yeah, sorry, just to add, I might be misunderstand the question. Just using technology definitely is important, but using technology to do our investment, this is something different. Just to differentiate, I was answering the first part, but of course, definitely using the technology where to put and to invest our money, either, for example, in green or decarbonized assets or on EV cars or whatever. I'm not a big fan of EV because I believe this is not sustainable solution. It's backfire on the whole ecosystem, and this is a proven report. But definitely using technology is important, and also it will minimize our actually targets. Minimizing means either to allocate our assets to set type of technology assets, whatever, or using the technology to reach our target. For example, I'll give you example. Now, for example, in agro projects, if you use the old technology to invest, etc., might take 3 to 7 years. But using the technology with less than 1 year, you reach the target by using basically the data, analyzing and using the super basic computers or AI to understand the technology has been used to reach the target. I'm talking in particular about agro projects because I was involved in 3 projects last 2 years, and we used technology a lot. And actually, where we reduce instead of reaching, I'm talking private equity, in 5 years, we reach less than 2 years the target.
Thank you, Roy. We're running actually well in time. I'm not sure if we'll have time for questions after this, but I'd just like to conclude this with one open question for all of you. If there's one piece of advice you could give to investors looking to deepen their understanding and commitment to sustainable investing, responsible investing, what would it be? Starting with Soumya, please. You want to go first, Suresh?
So I think one of the things I would recommend to investors is that they need to start identifying a portion of their portfolio that needs to go into responsible investments. I see too much of the discussion always in terms of responsible investing in family offices or otherwise, but not enough done to actually put money behind either funds or direct investments. So I think one is to just have the awareness, educate themselves more, because I think that's an important facet, but then also start allocating. When we spoke to family offices, we see almost like a binary kind of response where they say that 50% don't want to look at impact investing and 50% just want to do philanthropy. I think somewhere they need to start understanding that there is a role that blended finance, responsible investing can form in their portfolios. So I would just say they need to start, dipping their toes, at least for Indian family offices, and do much more.
What would you advise business leaders, Suresh, on this front?
Well, I mean, from an investment perspective, see, I feel that I think investors should pick the investment that makes the highest social impact. Beyond the typical template or boxes to be ticked that qualifies projects or investing companies. I believe, like I gave the example of food, right? So where if a problem is solved and less people are hungry, then that's much bigger social impact than, for example, I don't know, you're investing in EV, or which is also important. I mean, you want to reduce emissions, although it is debatable, like Louis was mentioning. So I think there is a kind of a focus on when you compare and when you have limited capital and when you have to choose where you're putting your money, to kind of have an increased emphasis on what makes the biggest social impact. I think that will be one advice I'll give it to investors.
Louis, any concluding remarks from you?
Thank you. And in a few seconds, I think we should be more, all of us, we are responsible toward our planet, toward our society, and toward our culture. We have to take care of our planet, but be reminded also, we should not look on numbers only. Responsible investment is not only IRR. Actually, if you calculate the feedback to the society, the basically modified IRR, it's much, much bigger than what we are talking about. I would love to see everybody allocate at least 20 to 25% of their portfolio to sustainable investment or responsible investment. And believe me, we are doing great jobs in certain areas. And this is something remarkably should be highlighted by everyone. And I wish the government to take the lead, especially the sovereign fund with the private sector to take the lead. And same like when I keep saying, when they want commercial banks, they push commercial banks to lend SME. They ask each basically bank at least 10% of their portfolio to be given or allocated to SME. I think it should be the same when we talk about responsible investment. Should be mandatory by the system in order to create the ecosystem and to have the mass environment or mass investment. Thank you.
Thank you so much. I just want to leave everyone with this parting thought, and you might want to reflect on it. Speaking of responsible investing, ESG, social awareness, it's much like planting a tree. The best time to do it was 20 years ago. The second best time is now. It takes time to bear fruit, but it's definitely something that will have a lasting impact, and it will take time, but hopefully the fruit will be organic. So thank you so much, everyone. Thank you. Thank you.
We have Thank you so much, speakers. That was pretty insightful. I think what we need to echo here from what we discussed is as he rightly said, that sustainable development, we all have been studying that it should have started a lot, back in the period, say 20 years from now. But But I think sustainable development is what we leave for the future generations, what we have today, and what we leave for the future generations. Some really good insights on what is green growth and how it has to be prioritized. Greater governance at the corporate level with BRSR reporting that has come into picture, how government, judiciary, and regulatory have to work together to ensure that the tone is set for sustainable development, and how we all are responsible to ensure that responsible investment should be our goal. It should drive us for sustainable development in future. Balancing act of doing not only just well but doing good as well. We have a very recent example of how ADGM has included fund managers with certain thresholds to do ESG reporting. How we have to convert all these challenges into opportunities, and how we need to ensure that we only talk about sustainable development in the years ahead. So thank you so much for all the insights. Without any further ado, I would like Mr. Raghavendra Verma, founding member of ICSI Middle East NPIO, to kindly felicitate all our speakers with first Ms. Soumya Rajan. A huge round. Mr. Loy Bataille. Loy Bataille. Suresh Vaidyanathan. And lastly, Mr. Prashant Tandon. Thank you so much once again.